Hello YouTube, welcome back to this week's Bitcoin update. Obviously Bitcoin has had a huge rejection from a major high time frame resistance zone, and today we're going to talk about what I'm looking for next. Is this the top for Bitcoin and we're going to roll over, or are we going to break through this local resistance and continue up and potentially make new all-time highs? So before we get into that, remember, nothing discussed today is financial advice. This is just for educational purposes only, and it's my view of the markets. Okay, so first and foremost, let's talk about this rejection. So if we bring up this box here, we can see a few things. Okay, so first and foremost, remember, last week I've been warning you guys that we are at a major high time frame area, and this is one of our public videos. So this was last week's public YouTube video. And we were saying that we were traveling, as we were doing the video, that we were traveling up into a macro golden pocket, macro point of control, huge sticky zone. So this was a huge resistance, and this was just before the genuine ETF news was released. Okay, so I was saying this is not the time for FOMO or longing. This is the time for caution and potentially a good opportunity to hedge your position. Okay, so this is what we're warning you guys about. Now, in the group, the members have known about this level. In fact, the members have known about this level for months. This is a chat and chill stream from back in November. You can see here, two zones marked out, one zone being lower, and that was here. And one zone being higher, which is obviously the zone that we rejected from. Now, the reason why we do this and how I like to trade in the group and how I teach our members is I don't know where price is going to turn around. I don't know where price is going next, because nobody knows this, and anyone that sits there and tells you this is what is going to happen next is a LARP, and they're talking out of the backside. Now, what I do know is how I trade is I find the regions on the chart where price is most likely going to react. And by react, I mean either slow down and range or reverse. This is how I trade. So my guys know, and you can see here on the right hand side, I've got my high time frame areas of interest, and this is what I give the guys every day and every 2 weeks for the high time frame stuff. The areas on the chart where likely price is going to react and where I'm potentially looking to take out either an intraday trade or a swing trade. Okay, so this is what we do. So this is why this is marked out so far in advance. Now we can hide this now and get rid of this, get this out of the way, and get this public YouTube one out of the way. And you can see here, this is the other one in more detail, and this is when price action is still hovering around here, saying I'm looking for one more drive up into this channel on this golden pocket. You can see here, and you can see one of my Elliott wave counts. Now, what I purposely, again, you can see here on my right hand side, I have multiple Elliott wave counts on the GOAT ones, and I order them by the most likely scenario because I'm quite a heavy Elliott wave trade, especially when it comes to the high time frame. So we've been waiting for this, patiently waiting for this sell. Okay, now moving into the day when it happened, you see I'm coming into the group, into my trading channel. We just hit the golden pocket and also a monthly point of control just above it, and also this major Elliott wave channel. So I'm saying that we're now getting interesting. And then coming straight back in, saying we've got a very nice looking dildo. Okay, now anyone that knows me knows that I call candles dildos. I think I stole that phrase from someone like Crown Crypto, I'm not too sure, but either way. Got a nice looking dildo here, and we can see here the point of control of this, and this is a 30-minute candle, by the way. This is a 30-minute candle. Right at the top, we've got the point of control, so that means the biggest transaction volume is right at the top of that 30-minute candle. And I'm saying to the guys, if this gets down now, again, I don't know, it's going to go down. This is no crystal ball, hindsight stuff. This is, if this goes down, we now have a lot of trapped traders up at the high into that monthly naked point of control. Now, what do I mean by that? Well, the ETF news came out, and what happened? Let's come out of this. Let's go into this. The ETF news came out, and what did the average trader do? And I say the term trader loosely. They got FOMO, and they aped into that final 30-minute dildo that pushed up, and they aped in, and they've been market buying. Okay, they've been smashing the green button at market, hoping that they're going to catch the most epic trade of a lifetime, and price is going to moon upwards. Okay, but what they don't realize they're doing, because again, the average trader is not educated and they don't understand technical analysis, The fact that they've just aped into a macro golden pocket. Okay, that's what they've done. Now, these people have let FOMO take over. And this is what you cannot do when you become a trader. You cannot give in to FOMO, and it's very difficult. Trading is all about emotions. The market is run on emotions. So, as I'm coming into the group after this, and you can see in it, and again, I'll quite happily take the piss out of these people. You know, people think that just because individuals are trading with significant size in the market, that they understand what they're doing. But the truth of the matter is, a lot of these people that have got this significant size got it by pure luck, or they've been holding Bitcoin since the very beginning, since the very early days. So they may be trading with volumes like 6.4 million, but they don't necessarily know what they're doing because they've never stopped to study technical analysis. They've never stopped to study where on the chart price is likely going to reject. And that's what we do. Okay, this is what we teach day in, day out in our Discord. So, as I'm saying to the group, as soon as I saw them up at FOMO in, 6.4 million at the very top, and that point of control, this point of control appeared, I just hit sell. It's as simple as that. Okay, now, some of you might be sat there thinking, well, Spitty, how did you know it was going to reject? You know, why didn't that 6.4 million just send price up? Well, it could have done. It could have done. And if it did, then I'd have been wrong, and I've been stopped out, and price would have gone higher. And the longs that I'm still holding from lower will just continue printing money. But what that means is, because I use strict risk management and I know how to calculate my position size, if I lost that trade, I'd have lost 1R. So whatever my defined risk is, that I'm quite happy to lose if I am wrong, I'd have lost that amount of money. Would I have lost my full account size? No, because I position size accordingly. I don't go all in 100% of my capital every single trade. And that's what you get when you understand how to use risk management. And this is what a lot of these people don't have a clue about. Okay, so hopefully you've learned something from that. If you have, hit that like button. And if last week's video did manage to save you some money by not FOMOing at the top, or you managed to catch that short, let us know down in the comments. Right, moving on. What's next? Okay, what's next? Well, I'm going to take the chart back out of log scale. And I'm going to throw on that same Fibonacci pull. So from the absolute top, 69k, to the absolute bottom. And there we go. So we've got this. And then we're also going to do the other thing that we did last week, and you saw this, is we're going to throw on the volume profile of the top range. Once it populates now, here we go. So what I'm looking for next, from a high time perspective, if this doesn't get any follow through to the downside, let's talk about upside first. Once again, it's just marking out where the most likely areas are. If we come back up and price starts coming back up, we've got a couple of things to contend with. First and foremost, are we going to contest? Wrong tool, right tool. Are we going to contest these highs? If we do contest these highs, are we just going to get a simple swing failure pattern back down to the downside? And then we get a bit of a local turnaround? Or do we not get a rejection here and we just continue higher? Well, if we just continue higher, then first and foremost, we've got value area high to contend with. Now, value area high is coming in roughly around 53k. Now, if we start clearing above value area high, then that's going to be quite a bullish sign. The next area that we've got to contend with, as you can see here, around the 786 fib, around 57 to 58k, we've got a high volume node. Now, if we don't get a rejection here and start to turn around, then effectively above here, we're then starting to look more than likely at contesting the all-time highs. Okay, so 57, 58k, that's the last major sticky point before targeting all-time highs. Does that mean if it gets past this, it's definitely going to all-time highs? No, it doesn't. Because there's no certainties in trading. There's no certainties. Nobody knows. If this clears this, then we take this. What we do know is if we take this, clear this and flip this into support, then the chances greatly improve of coming up towards all-time highs. But there's still a chance that it doesn't do that. Now, what happens if we just continue to roll over from where we are right now and we don't come up and contest those highs? Well, if we continue to roll over, we're going to do the same volume profile as we did last time. This one. And this is more of a trend volume profile. So this is going from the 2022 lows up to the current highs. So this is the whole volume profile of this whole move. If we do start to lose this local range, and we lose this without reclaiming it, and this just drops, and we start to come down lower, then first and foremost, we've got this area here. Now, as I said last week on the public video, ideally, if you're bullish, you either want the top side of this to hold, and if not, then you certainly want this bottom side to hold. Now, this is roughly coming in around 33 to 34k. If that doesn't hold, then likelihood is we're coming back down to this zone here. Now, this zone here, you will have seen many people on crypto Twitter or X and many people on YouTube saying this is the zone where everybody wants to buy. And I agree that it's potentially a good zone. Potentially a good zone. If we come down, it's just basically resistance, resistance, breakout, retest, and then we go on. But it's going to be a very crowded trade, so I want to see that in real time. It's not something I'm not going to set any stink bids down here. Because, number one, I don't trade like that. I want to see what happens. Down here, I'm going to give it time. Is it going to show me a local change of structure? Is it going to show me taking out a previous major pivot, giving us a market structure break, then giving us an entry, and then we can look for more upside? Now, does this upside mean new all-time highs? No, it means we'll play it up into the next sticky zone. Now, the next sticky zone might not be created yet, because it all depends on how price comes down here. How, and this is the context. That's why there's no set rules when it comes to trading. This is where people really go wrong. It's all about context. Things can change. Things can change overnight. Things can change in a 30-minute candle. Okay? So if we do come down, this zone here, very important. But if we start to get acceptance back into this value, then we can start looking down at lower prices. First and foremost being the point of control, roughly coming in around 28k. If this loses this, then we start looking back down towards 25k. If we lose 25k, then realistically, we're starting to come down 23, 20, or 19. But again, it's just level to level. It's pointless looking at these levels until, or if, shall we say, price gets to them. Okay? So that's what we do. So that's to the upside. So we've got this local range that we're still in right now. If we come down lower, then we're looking at around 37, 38k. If we come lower than that, we're going to be looking around 33, 34k. Okay? To the upside. Do we contest the overall highs? Maybe have a swing failure pattern above, up towards 50k. If we flip that, then we can start looking up at higher prices. Okay? If that, then this. That's the way to trade. Right. Hopefully you've enjoyed today's video. If you guys want to learn along and understand how to trade like we do, come over to our website, links down in the description, click on the Join Us tab and scroll down. We've brought back the annual membership, just popular request. So within this, you will get access to not only all the educational content videos, as you can see here, daily trading plans, high time frame swing trades, our chat and chill series, and then we've got all the educational modules down here. Okay. And then not only that, you'll get access to our private Discord with the community of other people learning along with you, all sharing their own technical analysis and helping one another out. And you'll also get access to our daily trading plans. We stream 5 days a week for our daily trading plans. So Monday to Friday, I talk through my trading plans for the day ahead. And that not only covers Bitcoin, but that covers Forex, stocks, commodities, altcoins, whatever's an interesting setup on. That's what we talk through. So obviously, if you want access to that, you need to come over to our website. Once again, links down in the description. Right. Until next time, gang, as you were. Bye-bye.